You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tusall from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call the option block. A little bit of options wit, a little bit of options wisdom, some insights, some hilarity. At least we hope so. Some analysis, some unusual activity, your questions, a whole bunch of strategery, mix it all together. You got the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the hopefully ever interesting Options Insider Radio Network. A whole smattering of stuff for you guys to enjoy on the network. If you like the option block, well, of course, VolView is probably a good place for you guys to hit up if you haven't already. We talk all things VIX and volatility, deep into the weeds on that one. If you're into volatility across the spectrum, including commodities and TWIFO, This Week in Futures Options, also an interesting one for you guys to check out. Of course, we have our daily news show every day, our advisors show, our other programs, which I'm blanking on the top of the trading tech talk, all that fun stuff. Find it all, theoptionsinsider.com, and just click away. Your audio journey has begun. Of course, some great breaking news, headlines, all the other fun stuff on the website up there for your reading pleasure as well. And of course, if you just want to mainline the audio, iTunes, TuneIn, Stitcher, iHeartRadio, all those places, including via our mobile app available for iOS, Android, and the beloved Fire OS. Grab it if you haven't done so already, and you can just stream till your heart's content, which is always a fun thing to do. And however you listen, including those of you who can join us live every Monday and Friday via Mixlr. It's even Monday and Thursday via Mixlr, MIXLR, 3 p.m. Central, 4 p.m. Eastern. Love to see you guys as well. However you listen to us after the fact, beforehand, whatever you like to do beforehand, that'd be impressive. More live. And then, of course, hit us up with your questions, your comments. We do love to hear from you guys. And joining me on the program today, let's kick things off. Let's go out to the place full of pickles, also known as St. Charles, Illinois, where we are joined, I believe, if the Skype gods are smiling upon him, by Uncle Mike Tusall from RCM Wealth Advisors. Uncle Mike, are you there, sir? Are the Skype gods smiling upon you?
I am here. Excited to be here on a Monday.
It's always exciting when we're breaking and blocking some options, all right? And also joining us, I think, a little bit closer to home, but you never know with him. He is a greasy meatball, so it tends to roll all over the place. Good old Mark Sebastian from Carmen Line Capital by way of OptionPit.com. Mr. Greasy Meatball, welcome back to the Option Block. It's been a while. And then also, where are you beaming in from today? Whither the meatball today?
I am in beautiful downtown Chicago at our world headquarters at 190 South LaSalle. So I am a stone's throw from you, Mark.
Yes, a mighty stone's throw, but a stone's throw nonetheless. So there you are, listeners. If you want to have questions about any of the webinars they do over there at Option Pit, or you want to say, hey, you guys should be writing some puts in Carmen Line, whatever the case may be, go knock on the door over there, 190 South LaSalle. And you, too, can have a face-to-face with a meatball. I might have even some delicious meatballs as a buffet there for all you listeners who walk in because, you know, he's just that kind of guy. All right, and with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was moving, shaking, rocking, rolling, any other descriptive term you could use to describe the day. Not so much really appropriate today, not a whole lot of rocking and rolling. We did have a little bit of a range. The closing end-of-day numbers here a little bit deceiving. Most of the major indices closing effectively unched on the day, but the S&P had a little bit of a range, about 9 handles or so. So not quite as quiet as it might appear, but still not exactly rock'em sock'em robots. Again, most of the major indices closing unched, and VIX cash inhaling a little bit after the weekend here, getting a little bit of that back, and a little bit of that love back after some downside on the old street, hovering right around that 11 handle after having, let's see, yes, it did. Oh, no, it didn't. It got close to breaking through. It did not break through, but it got close to breaking through. 11.06, so we didn't break the 11 handle today. I think my vol views prediction is safe. We shall check again later this week. But a lot of interesting stuff popping off. Snap taking some love to the downside today. So all you people who've been writing in saying this name is overdone, is overblown, is garbage, blah, blah, blah. You got a little bit of argument at least today, off about $3. We'll get to that in a little bit. But first, let's go out to my cohorts. Let's go in the same order here. See what was catching their eye in today's just explosion of activity. We'll start with you, Uncle Mike. What was catching your eye, and how could you possibly focus on one thing today with so much stuff popping off left, right, and center? It was crazy, madness.
I must be looking at a different screen than you. I would say that it's a sea of red, but it's really not that red. It's just kind of maybe like a sea of pink, a little bit light red, I would say. So I'm showing you, it was a pretty exciting day today from the standpoint that initially we go down, then we do recover a little bit. We're still down on the day in the S&P. Sector-wide, we're down, I believe, just looking at XLE, the energy sector, looks like that one's up a little bit where I'm looking at it right now. But aside from that, it looked like everything was down a little bit. What I thought was interesting for the day in terms of where we went down to, we did actually on SPY, we did our low of the day was 237.01. And this does seem to be kind of an area of where the high was on last Tuesday, the Tuesday before the Trump speech. So with that, not quite the high, maybe a couple pennies away, but it looks like we may have come close to filling the big gap that happened for the Trump rally, the latest Trump rally, from his speech, with which he looked very presidential, is what the headlines were saying last week. So, I hate to be overly optimistic, but I'm typically overly optimistic. So I think that we have pulled back a little bit. And I think tomorrow is going to be a really key day to see if we can get some progress from the lows of the day today. Not the up day today, because it obviously was not an up day, but we went down. We did come up, which I do view as a sign of strength, but it's one where we still are in the red on the day based upon the gap down we had. You look at the trading based on the cash hours of today, we're up on the day, but based on the close of last Friday, we are down. So with that, I know I always look for every optimistic bit of hope with which I always can, and that's what I have today.
Always ever the ray of sunshine here on the old All-Star panel, Uncle Mike. So we like having you on here. You know, you bring that little bit of cheeriness even to a relatively ho-hum day like today. Now for the other side, the dark side, we turn to the greasy meatball. Sir, what was causing ire for you today in the market, Mr. Meatball?
Well, I mean, how about the fact that we opened up down about 14 points and VIX was adjusted for the weekend, not even up, and VIX futures were down. It was pretty impressive. We saw the market up today, or the VIX up marginally today. Really, I would argue down, but with the market down, we still saw VIX futures get absolutely plastered. Where we saw some real softness was in some of the financials. At one point, Goldman and JP Morgan, some of the mega cap banks, were getting smacked around pretty good. The GAF stocks were down today. Your Apples, your Amazons, your Googles, and your Facebooks. But other than that, just really slow and boring, and I mean it was a snoozer. So.
Yeah,
I don't know what to tell you.
Speaking of slow and boring and quiet, It was a relatively quiet month last month here. Of course, it's early in March, beginning of March, so we have the ability now to look back with the benefit of hindsight on February and see how things were doing over there in Feb from an overall options and volume perspective. Again, probably going to be a rough comparison because if you remember back to Feb of 2016, things were happening. Things were rocking and rolling. We were still in the tail end of that really plus or minus 1% moving a day period we had there. It lasted till about the middle of February or so, if you recall. So there was a lot of movement, a lot of volatility, a lot of things popping off last year. Fast forward to this year, this February, not so much. You can kind of expect probably things were a little bit quieter, and that's pretty much what we got. Overall volume, this total OCC volume, perhaps not as bad as you might think, down only 1% from February of last year. That's total. Remember, OCC clears a lot of different stuff, futures, stock loan, a bunch of stuff. So total contract volume down 1%. Their year-to-date ADV, so year-to-date average daily volume, again, this is from our friends over the Options Clearing Corp, OCC, down 5% for 2016, about 17.2 million contracts so far this year. And digging a little bit deeper into the products we like, the listed options, overall exchange listed options volume, about 323 million contracts in February. That's down about 3% from February of the year before. So again, taking it on the chin, but not perhaps as aggressively as you might think. Overall equity options volume, digging a little bit further, that's about 284 million contracts. That's a 4% decrease from February last year. Digging a little bit deeper into the ETF options volume, that was about 121 million contracts. That was a 10% decrease from Feb of 2016. Again, kind of reflecting that lack of movement we saw over the month of February in SPY, obviously a big, and some other big ETFs that really were big ones. Of course, overall, we still saw net index options volume up about 11% at OCC with about 39 million contracts. Those definitions get a little bit muddy sometimes. Where does SPY fall? Is it an index option? Is it an ETF option? Is it in both camps? So sometimes those definitions can get a little bit muddy. But overall, interesting when you parse it. Again, year-to-date ADV for equity options down 8%. So that's when you start digging through the numbers a little bit. You see things are a little bit uglier. That's probably what you'd expect given all the rock'em sock'em last year. Year-to-date ADV for index options actually up 4% this year, which I think is a little bit surprising. Nearly 2 million contracts a day, a little bit shy of that over there in options land. Mark or Mr. Uncle Mike, anything surprising you so far in these numbers from last month, or is it pretty much what you expected, all things considered?
I mean, I guess pretty much what I expected, all things considered. That would be my answer.
There you go. Well, there you go. That's kind of what I actually expected them to be a little bit worse, quite frankly. So I guess the fact that they weren't, off double-digit percentages. Well, one of them was, I guess. But that was about 10% in the ETFs. But other than that, it wasn't as perhaps crazy as you might think. Speaking of crazy, some things are out there. People have been asking us about this. People have been putting out articles and stories of late. A big one last week that got a lot of people's attention was in USA Today about brokers out there really fighting tooth and nail for your business, which you guys might like to hear. You guys as the listeners out there. The listeners want you guys. The brokers, they want you guys, these super active, hardcore guys. And so they're cutting their commissions to make it more attractive across the board. Also to compete with some of these, shall we say, lesser competitors out there who are doing things essentially for free, like the Robinhoods and others. If you want to attract this new demographic of traders, the millennials and beyond, you got to kind of make things a little bit more attractive on the onset, and that's kind of what they're doing. We saw Fidelity kicking off the fight last week. They cut their commissions on stocks to about $5 from about $8. Schwab doing the same thing, matching that a couple of weeks after they'd already cut it down to $7. TD Ameritrade going from $10 to $7. Again, this is for stock. Again, reflecting, at least from USA Today's perspective, all they really care about is stock. We didn't see a lot of pushback and huge changes on the options front. Again, we'll have to dig in a little bit more to see E-Trade going from $10 down to $7. Again, if you're an active trader and you do a bunch of trades a month, those numbers are going to change a little bit too. So we're seeing an interesting little bit of a back and forth, a little bit of a price war. You can see the link to the article and some of the other articles in our show notes. Some cool visuals too. You can see how all these firms are kind of pushing back and forth. So interesting to see them kind of jockeying for position. We've said it in the past, commissions shouldn't be a huge driver when you're out there choosing an options broker. There are many other factors out there that that can weigh in, including strength of platform, including the educational content they offer, virtual trading, all these other things. The actual UI of the platform, make it easy to trade or harder to trade. How they offer margin, what kind of functionality they do, and doing the dark voodoo of margin calculations. All of that should really feed into how you evaluate a platform. But still, a lot of people still like that number at the front when they first log in to see exactly how much they're going to pay. And if that's you, then this at least will give you some hope. Again, I have to dig in some more to see if they have adjusted at all, if they have adjusted the options commissions. You have to think at least there's going to be a little bit of pressure on those as a result. But I don't know, Mark, Uncle Mike, either of these stories or either this really getting you excited? You're going to think there's a little bit more interest, or maybe on the other flip side, does this maybe alarm you a little bit that brokers are kind of scrambling now to get more clients, and they're going after maybe a client that's a little bit more commission sensitive and maybe not always the most ideal client for them? What's your thoughts? Maybe Uncle Mike, we'll start with you.
All right, yeah, Mike, go first.
Okay, a couple things. I remember when I first started with Options Express back in 2005, so that was, 12 years ago. I remember that the fee was $1.50 per contract with a $15 minimum. And that was very competitive. That was kind of in the middle of the road at that point in time. I remember just talking to I had a friend of mine who was just an older market maker, and he was saying, wow, you can actually get that retail now, $1.50 a contract with a $15 minimum? That's insane. And right now, if you came to someone and told them that rate, you'd get laughed at. And there's no way on earth anybody would do that. So rates have been coming down for a long time. On the stock side of it, I don't know if it's really going to be of benefit to the broker to lower their trade rate from $1 a trade for stocks, quite honestly. Yes, you'll get more frequency of trade, but I don't know if that's really going to help them attract a lot of new clients because people aren't, how do I put this? I think that commissions are so low right now in general that I don't know if that's really going to help them attract new business. Brokers make money off of a lot of things. They make money off margin interest. They make money off of loans. Schwab, for example, is a bank, and the money that you have in your cash account at Schwab, the banking arm of Schwab can benefit from that, as can other brokers that are banks as well. So commissions are just one part of it. On the futures side, the futures brokers make a lot of money off of the money that's just sitting there in cash because of the fact that because it's same reason, basically. A little more to it than that, but the same concept of it. So I don't know I think it's going to bring attention to them, but I really doubt that there's someone saying, oh, yeah, I wish I could pay $1 less in commission. I knew it, because most of the people that are so commission sensitive, they're already at a place like Interactive Brokers that they charge next to nothing to begin with. I know that we have our deal because we have over $1 bajillion under management. I don't know. You can talk to Kavanaugh of all the money we have under management as a firm these days, but it's definitely well north of $100 million. We get 35 cents per contract with no ticket charge through TD Ameritrade, and we pass that on to anybody who is interested in trading through us on the retail side of it through our umbrella. I mean, there's a few stipulations to it. We do charge a small fee, but for the most part, we have not gotten. I have a smaller portion of my business comes through that, just because of the fact that most people that are looking to save every penny, they're always going to find a place that you can save a little bit more from. So most of the people that are my clients that take advantage of that commission rate, which of the major brokers, you're not going to find anything that touches that. Now, we charge a small fee on it. That's how we make our money. But still, you're not going to find anything that matches that. It's a very small portion of our business because, like I said, there's always going to be some place out there that's going to be a little bit cheaper. That's my thought on it.
Yeah, there certainly is room to play, on all sides of the spectrum. You got the high end, the traditionally former high ends like the Schwabs and others, and of course you got people who have had low commissions from the beginning, like Trade King, been on our network forever, and they do very well attracting that more price-conscious consumer. And they still manage to put together a pretty good platform, and they have great content like they do on our network, and of course on their playbook and the other stuff that they do over there. So a lot of interesting ways you can kind of carve this up. I'm sure Trade King's kind of maybe laughing, saying, "Hey, we've been playing here all along. Now everyone's kind of waking up to where we're playing on the space." I don't know, Mark, you interact with a lot of active retail, shall we say, over there in the land of Option Pit. What's your thought here on this kind of ongoing back and forth on the brokerage side? And do you see this accreting on over to the options clientele eventually? I mean, it seems like a price war is going to affect all clients eventually. You think this is kind of limited on the kind of low-hanging fruit stock guy?
I think there's a couple of factors involved. I think it shows, one, how much money they're getting for selling the flow back, which is they make, for people that don't know this, they probably make more off of your trade than selling it to somebody else than they do actually off what you pay. So I think it shows how much they're making there. I think it shows how much they're scraping to try and find new clients and millennials who are more inclined to do some startup or put their money into some app than they are to actually go in and begin an investment profile. I think that they're seeing that this is their way of combating maybe some clients that are leaving for like the cheapest. You get cheap enough, and yeah, you can save money, but there's certain guys where at a certain point they don't care about the headache. They care about the headache enough, and I think it's just it's kind of like the cola wars a little bit, where they're just after each other for any market share they can scrape. But they could go to zero on this number and make a boatload of money, probably make more money because they're making so much selling that flow. There's a certain amount of math that it's done where they look at how much are they giving up for your order versus how much are they getting when they sell it. And if they can increase the amount that they're getting when they sell it, or how much they get to sell, they'll be in good shape. And so that's just kind of the way to think about it.
And speaking of thinking, let's think about some weird paper because it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it's time once again for the odd block portion of the show where we break down weird, whimsical, wild, wondrous, head-scratching paper that is lighting up the options market today. Surprisingly, even though it was a quiet day, we had some interesting paper, including a few sizable trades. Let's kick things off, and probably one of our weirder ones here today is HYG. This is the iShares Iboxx High Yield Corporate Bond ETF. Say that 5 times fast. I triple dog dare you. Ticker symbol HYG. Closing today, $87.70, off about 30 cents, or about 0.3% or so here. This is the name that does pretty decent paper, about 57,000 contracts a day, doing over 4x that, about actually a little over, about 207,000 contracts or so a day. So right around that ballpark. And what caught our eye was there was kind of paper across the board out here today. Overall, it's about 3-1, though, puts over calls, and that's where our attention was drawn. But there were puts lighting it up in April. There were puts lighting it up in March. Looks like a straddle went up, perhaps, or maybe some sort of conversion reversal went up in March. It was the March 95. Which is interesting. Those puts a little bit meaty, 24,000 times. So kind of pick your poison. But what poison caught our eye was actually, looks like a funky put spread, maybe a stupid, I don't know, kind of call it what you will out here. Let's look like a spread, though, because it went up for a nickel. It was the May 82.80 put. I guess it's a spread going up about, when we started looking at it, 15,000 times for a nickel. So 20 cents on the 82s, 15 cents on the 80s. As the day went on, a total of 25,000, so another 10,000 coming in, total of 50,000 on the spread. I say maybe a nickel because it also could have been, I'll have to see if they got them, where they got them both. Also, net opening on both of these trades, because there's about 8,000 contracts open on both strikes. So clearly opening paper, about 3x total going up on each of these strikes. And the reason I say this was funky is for a couple of reasons. The price was kind of weird. If it was a spread going up for a nickel, I mean, who's selling this May put spread that's a little more than $5 out of the money. Who's selling that for a nickel? That's an intriguing prospect, let alone doing it 25,000 times. The reason I say it was also weird, too, is that both of these legs went up, essentially lifting the offer 20 cents and 15 cents, as you might imagine. Those 80 puts offered at 15 cents, not exactly bid there. So kind of a bit of a funky execution. I don't know, Mark, do you have a chance to sink your teeth into this one? Paper flying all over the place, hither and yon out here in HYG. In particular, though, this funky put spread / stupid. And if they are indeed, if this is paper opening and coming in and selling an opening put spread, $2 put spread, a couple of $5 out of the money all the way out to May for a nickel, I'd imagine you have some thoughts on that.
Yeah, I mean, I think that was a spread, and probably, I guess the broker put it up, so it's facilitated. But there was a ton of paper that went up, Mark. Not just in May. There was like a big conversion that went up. There was like a three-way spread that went up. There was just tons and tons of activity in HYG today. Normal day in HYG, they do about 57,000 contracts. They did 207,000 today. So 4x their normal volume, and almost all of that puts, 157,000 in puts. So there was some pretty heavy volume kind of across the board in April, March, and in May. Looked like some reversals trading and conversions versus a lot of like these little cheapy out of the money spreads. So just some interesting paper. The thing about HYG that you have to remember is because it's a high yield bond, you never know exactly what somebody's trying to do and whether this is against some sort of actual holding, but it looks like it was probably facilitated by the broker. And a $5 move in HYG is a relatively nasty move, as I recall. And although it can do it, so my guess is you've got somebody who's looking at the spread between treasuries and high yield debt and saying, boy, I should do something about this.
I don't know if that's the thing I would opt to do in that scenario. I'm trying to think of a scenario where giving away a put spread like that, $2 put spread for a nickel, is somehow advantageous. At the very least, and I agree with you, it probably was facilitated. It kind of had to be. I might have issue with the facilitation there and saying, maybe you get me a little bit better on those 80 puts. Maybe you get me a little bit better. Like, I mean, your grandmother can go out there and give that away for a nickel. Doesn't take a genius on the execution side to make that trade happen. And the NRG, you're right, it's kind of, or has been, HYG is NRG's next up. HYG has kind of been on an interesting little run of late, looking back on the year. This thing started the year kind of down about 80, right around the place where this put spread starts to look interesting, which is about 81 or so. And this thing got as high as about 80, almost 89 out here. So you're right, a $5, down to the 82 strike is a pretty aggressive move for this thing. Still, I have a hard time envisioning me putting on that trade, but then again, who knows? Maybe our friend really wanted that nickel. By the time he gets facilitated and all the commissions, I don't know how much of that nickel is going to be left for him. Maybe getting back to that commissions talk we had earlier. Maybe he's on the active trader campaign or the active trader rate. But still, that's an interesting one. If you would give away a $2 put spread a few months out, a few bucks out of the money for a nickel, let us know, listeners. Write in. Tell us why you would do that. Give us your thoughts on that. Let's move on to as the aforementioned NRG, staying in the three-letter ending in G tickers here in the odd block. NRG Energy, ticker symbol, like I said, NRG, closing in about 1736, pretty much unched on the day. Not a lot going on from an underlying perspective. From an options perspective, though, it was rocking and rolling pretty good. This thing does about 5,000 contracts a day, doing about 11, nearly 12,000 today. About 12.5 to 1 calls over puts. Now, that should give you an inkling of where we found our victim out here. And this was kind of going back to what we've been saying for a while here on the show. We're in this kind of, call it volatility malaise, call it what you will. People are going a little bit further afield, doing a little bit more interesting, sometimes head-scratching things to try to generate some yield. We've seen people rolling out multiple months, 3-4 months for a nickel, 6 cents, some questionable things, not quite selling put spread for a nickel things, but getting up there. Our friend here doing a little bit better than that today. We got someone carving out some yield on the June 19's doing a pretty size override, about 10,000 contracts, so almost an entire day's volume out here in this one trade. Blasting those out for 75 cents. Went up in one block over there on the Amex. Again, looks like has all the hallmarks of a buy right, probably against someone who's already sitting on a good pile of stock. And if this works out to their favor, this is about a 5% yield out to June. So given some of the other rights we've seen of late and how people are kind of scratching for a couple of cents, getting 75 cents for a few bucks out of the money contract, out to June doesn't seem like the worst play, certainly that we've seen over the past month or two. We've seen a lot more head-scratching ones than this. And this thing's had an interesting little range. Got down to about $10 back in November, and then rallied up to about almost 18 or so out there. So it had a nice 8-handle range or so. And our friend going a little bit beyond that, going out to 19, give himself a little bit of wiggle room to the upside, as well as the call premium. So he stopped out, obviously, 19.75. Not a bad little range. That would certainly be beyond the 52-week high. So our friend here, not a bad opportunity to get himself some yield. What do you say, Mr. Rock Lobster? I know I see Mr. Rock Lobster. You can take umbrage on that. I allow it. Mr. Greasy Meatball, what do you think on our friend here? Taking all the yield he can get here in NRG.
That would make a lot of sense. NRG has not been in a lot of places lately. And so, I look at that. I mean, it's had if you look at the way energy has been choppy kind of since the beginning of the year, we were kind of discussing oil in an option pit today. And, we look at those as been kind of choppy, but really in one spot. And this kind of falls under that. We think that energy's not going to move very much, and so premium harvesting makes a ton of sense, including in NRG.
I'll let you recover your composure there, sir, as we move on to our final name. By the way, people chiming in, I was asking you guys, hey, why would you do? What's your thoughts on giving away $2 put spread, a few bucks out of the money, a few months out for nickel? And, let's lost the name. We're Derkamazar. Two, because there's apparently one before him saying it's ultra bullish. I guess I could see that. If you're ultra bullish, there are other ways I might choose to express that. But if you're in the ultra bullish camp, maybe you too want to give away all your risk for a nickel. Have at it, sirs. The floor is yours. All right, let's move on to another name that's been popping up all over the place, both on the odd block and just physically in real life. Seems like it can't go to a corner anymore without seeing either a mattress firm or this name, Dick's Sporting Goods. It seems like how everyone else is getting out of brick and mortar retail, those two firms seem to have a handle on it. Either that or they're laundering money for somebody. I don't know, because they're everywhere, all over the place, on every street corner. Dick's Sporting Goods, ticker symbol DKS. Closing today, $52.61, up about 30 cents or about 0.5%. This is the name that does, about 5,600 contracts a day, doing nearly 10, actually over 10x that, 60,000 today. So a rock'em sock'em day, about nearly 2.5 to 1 calls over puts out here in good old Dick's. A lot of this probably having to do with the fact that they got some earnings coming out, and they're coming out before the bell tomorrow. So if you wanted to play them, now was your opportunity. You had to get in before the bell. So hopefully if you're saying to yourself, oh, Dix, I want to trade that, hopefully you did so already. Either put some on or took it off, probably hopefully in the latter, as we've advocated many times here on the old show, including like our friend here who was lighting up some near-term, obviously, some earnings-related paper. It was the front month, March, 52.5, 57.5 vertical, going up, starting the day, 2,000 by 2,500 times. So a little bit of a funky ratio. Looks like paper buying the 52 halves, then selling the 57 halves, doing it for $2.40 respectively. As the day went on, looks like a total of about nearly 6,000 on the 52 halves. Again, there was paper across the board, so not all of that is spread related, as well as about 18,000 on the 57 halves, which is kind of interesting. I don't think his ratio got that out of whack. He clearly put some more paper in after the fact, maybe another 2x or so. So maybe 4,000 by 5,000, somewhere along those lines. But clearly someone had an axe to grind on those 57 halves. Again, a total of 18,000 going up, only 10,000 open on that strike. So clearly some opening paper, about 7,000, a little bit different story on the 52 halves. So that probably was our supposition going into this. This spread, at least the initial trade, went up in 2 blocks over there on the Philly. So it has the opportunity, the inkling that it could indeed be closing. If it is closing, it probably is closing on the 52 halves and then maybe rolling on up for a little bit extra pop on the 57 halves. Remember, the stock went out right around the 52 half strike, so maybe our friends here decide, I got a nice little pop here on a 52 halves, going to take that and maybe replay with that house money. It is possible more of that 18,000 is our friend here. I'll have to dig a little bit to see exactly how much he may have put up there. But in general, it's looks like a lot of love. And unfortunately, when we have the earnings before they open, we don't get a chance to check the OI until the announcement already happened. So it's kind of par for the course when we're still in this antiquated once-a-day open interest update. I know that drives you guys crazy out there listening. It drives me crazy, too. Don't worry. It drives a lot of people crazy. But we're not going to see that change anytime soon, unfortunately. And looking back here at the year that was for good old Dick's, kind of flirted with around some lows around the 39 level, actually 38 back in May of last year, so right in the early summer. And then it kind of, ever since then, it kind of was on a nice little tier, got up to about 62. Then it's kind of been, that was back in September, so Q3 or so, then kind of vacillating around. Right now, at the kind of lower end of its recent range, right around 52, so about 10 handles below that level. So, but has been popped up a little bit, popped up from about 48 back about a week ago or so, a little more than a week ago. So our friend here, if he is sitting on the 52 halves, might be looking sitting pretty on those. We don't see a lot of decay traditionally coming out before the earnings event itself, as you said many times. So our friend here probably looking pretty good, taking those off, but keeping the party alive on the 57 half strike, which is kind of interesting. Obviously, if that is him, then it looks like it is. Then he's betting that there is more upside. There's more street corners yet for Dick's to find and establish a headquarters in the sporting retail. Mr. Greasy Meatball, I know you like all sorts of retail. I don't know if you follow the sporting retail, but what's your take on our friend here? Probably taking some money off the table and then putting it back on the table with a little more extra here in Dick's.
Yeah, I mean, that makes a lot of sense. People do that a lot. It's basically just recalibrating your delta. Like, you probably only want so much delta exposure, and the way to manage that delta exposure is to, increase the is to take some money off and then buy at a higher strike.
Yeah, not not a lot really. That we can extra parse on that, aside from the fact that, he seems to like it still, which is interesting. Usually you get a nice little pop in your pocket, you're happy. But in this case, he's saying, you know what, the party's still going and our party's still rolling because it's Monday. It's time for you guys to join the party. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. This is, of course, a portion of the show where you guys hit us up with your questions, your comments, your insights, your pearls of wisdom, and we debate and enjoy them here on the old program. You guys got Snap on the brain, so we'll get to that in a little bit. Let's kick things off, paying off our question from last week. We asked you guys, this was on the heels of the big Oscar screw up. We said, hey, Warren Beatty screwed up the best pictures. What's your biggest options screw up? We gave you the choices of held on to the shorts too long, or time decay killed you, or your gamma exploded in your face, or your Vegas snuck up on your deltas. And tie, actually, when it came out to a tie, 37% each, very rare tie, for holding on to your shorts too long and time decay killing you. It's kind of interesting, showing maybe a little bit of the breakdown of our audience. I always thought our audience skewed a little bit more to the dark side, a little bit more to the short premium side. But some of the recent results from some of our surveys have me surprised. There's more long premium traders out there than I initially would have guesstimated. And certainly by the results to this, it does seem like some people are buying some premium. Again, I applaud that too. We applaud the degenerate premium buyers out there like Uncle Mike. You guys all have your place in the world. Just kind of interesting to me. And then Vega, 15%. And Gamma, perhaps the more esoteric of the bunch there, only a meager 11%. You guys wrote in with your other your suggestions. Your buddy Tubby, Mark writing in with his calls on Tesla were his biggest mistake. John D writing in, he put on an iron butterfly the wrong way. That could be painful. We had a bunch of other examples. Thank you for sharing those. Those are always fun as well. Just to let everyone know that they're not alone out there. Everyone makes mistakes. But fast forwarding to to Snap. Snap's just been a bear, a beast, everyone and their mother, asking questions about Snap, talking about Snap, asking us all into Showtime last week. When are the options coming? When are the options coming? We kept saying we hope they're coming soon. We didn't know an exact date. We do now have one. SIBO kind enough to put that out an hour after Showtime last week, so we didn't have a concrete answer. But they are indeed coming this Friday, March 10th. Fingers crossed, all things being able to be listed in time, but they are accelerating this one. They want to get it out there. Because I know there's a huge hunger for these things. So we've asked you guys, you guys have been asking us a bunch of Snap questions. We've been asking you a bunch of Snap questions. You've been firing off. We asked you last week, right pre-IPO, just showing how smart you guys are. We said, hey, if Snap opens at its expected number of 17, what would you price that 1 week out straddle expiring on the 10th? Between $1 and $2, between $2 and $3, between $3 and $4, and over $4. 55%, a whopping majority of you guys. This is before it even listed, mind you. So our audience, again, pretty savvy. Over $4, all of you knew was going to rock and roll. So well done to you. And we also asked you, this was back, I think, right around Showtime on Thursday last week when it was right around 24.5. Again, pretty close to where it's trading right now. We asked you if the options were available tomorrow, that Friday, would you rather buy a 1 month 24 put, a 1 month 25 call, stay the heck out of it, or sell some premium? And buying the put won with a pretty substantial margin, 41% versus 24% for I'm just staying the heck out of Dodge. And then 21% coming in the dark side saying I'd rather sell premium. And only 14% buying the call out there, which is kind of interesting. So fast forward to this week. And you guys got more Snap on the brain, so we got it for you. We asked you guys, hey, the options are coming this Friday. So assuming when we posted this morning, Snap was right around $25. It has given up the ghost a little bit since then. Closing today, let's get the final here. Actually shy of the 24 handle. So 23.77, off about 12% today. So giving up some of that love here, maybe you 24 put buyers. Looking savvy in hindsight. We said assuming Snap was still around $25, let's price that 1 week straddle expiring on the 17th, so a week from Friday after they list. Obviously, how much movement are you guys actually expecting out there? And we gave you a similar range to last time, between $1 and $2, between $2 and $3, between $3 and $4, and over $4. Again, this posted when it was right around $25, so it hadn't really moved much more since then. Obviously, since then, it's sold off about $1.25 or so. So we already got a nice $1 and change priced in. That said, let me pull up the results while I ask you guys. Again, this is open for the rest of the week, so just went live. If you haven't voted yet, listeners, get in there, make your voices heard. Let's start with you, Uncle Mike. What is your vote, and what do you think is winning our battle here?
$4 for over $4, over $4. Let's get some action going, baby.
Let's go big or go home. Well, I'll give you the answer in a minute. Mr. Rock Lobster, I said it again, Mr. Greasy Meatball. What is your vote, and what do you think is winning?
I'm gonna hate to be it. I agree with Mike. Oh God, now I'm doing it. I agree with Mike. Over $4 and over $4. That's it.
Yeah, that little bit of an extra kicker today kind of sealed the deal. If you were kind of hovering, if it closed at 25 and you were kind of wondering, well, how much am I expecting? It already kicked in, 25% of that move already. So you got to kind of lean that way. Still, it's a kind of an even split with 42% coming in a pretty niggling move, about between $2 to $3, with 42% of the vote right now again, and then a tie for 25% each between 3 and 4 and between over $4, and only 8% saying between 1 and 2. So those guys of you saying it's only going to do what it's done so far, this far and no farther. So the pessimistic of you out there. Again, this just went live a little while ago, so you guys have plenty of time to digest this one. We'll give you some more updated results later in the week when we come back on Thursday. All right, let's move on. Oh, this is one for me and you, Mr. Meatball. So, Mike, you can sit up. This comes from Hop Grower. And I wonder what he likes to do in his spare time. And he says, Mark and the Meatball, love your shows. Well, thank you. I didn't know it was the Mark and the Meatball Network, but apparently it is not. My question is as follows. How much heartburn does this thought process give you? I have a directional bias, and I buy a slightly in-the-money call 45 to 60 days out. So far, you're not causing a lot of heartburn. He goes on to say, the stock moves in my favor, then stalls or retraces slightly. I then turn it into a vertical. Please fire away, always learning, Hop Grower. Well, I've seen a lot crazier things people have suggested than buying a slightly in-the-money call about 2 months out, so you're not hurting that much from decay, and then the underlying moves in your favor, then maybe pauses and you turn it into a vertical. I don't have a lot of umbrage to that. Maybe the only thing you can maybe do ahead of time is maybe you say, okay, you can do the vertical first to reduce your outlay, but then you don't have the movement. I'm okay with these inertia type verticals. That's how I refer to them anyway. So the underlying's moving in your favor. You got a little bit of a pop. You can always take it off too. That works. But in general, if you're not you don't say why you don't do that. You don't say why you don't unwind the position. You instead turn it into verticals. Maybe some more of your thought process on that would be nice. But in general, this doesn't deeply offend me. I don't know, Mr. Meatball. Does this give you, how much heartburn does this give you? He wants to know.
Same. I'm fine. No big deal.
Well, there you go. That was scintillating radio, listeners. I'm fine, no big deal. So, Hop Grower, you're not causing a lot of outrage. Maybe Uncle Mike, maybe you have outrage on this. Maybe you say to yourself, you know what? In the money calls, this deeply offends me. I am disgusted by this. You should instead be blasting out straddles all day long. Is that your feeling, sir? I kind of feel that's how you like to trade.
I think I couldn't even tell you the last time I did a straddle of any type, to tell you the truth, not even for a hedge or an adjustment or anything along those lines. But nope, I'd say it does not give me a lot of heartburn, and I'm just kind of sad that I didn't get to be part of that question, Hop Grower. Next time, include me. I'm a nice guy, too.
Yeah, no love for Uncle Mike there. Just me and the Meatball. That's the whole network, apparently. So, hey, Mark and the Meatball. I get it. A little bit of an M&M deal going on there. It's kind of funny. It rolls off the tongue. All right. This guy, what we got? Wizavet, I don't know how to pronounce it, says, calls on Apple are dead money. I don't know. Let's see. They haven't been that dead money of late. Today, not looking that good. But overall, the last month or so, if you were loading up on calls in Apple, you've done all right. Particularly when we were saying around earnings that vol was kind of cheap. That was a time when loading up on some premium, including on the call wing, actually did all right. All right, Uncle Mike, since you're taking umbrage, here's one that is just for you. So now me and the Meatball can take some umbrage. This is from Tom Drake. He wants to know what's up with Mike's SLV collar. What is up, sir? What's going on?
Nothing. It's one that I figured would be much more active, but I am in the exact same positions that I was in a few weeks back when I put the position on. My plan was if it kind of goes up and down a little bit, that I might make some adjustments and do a few things, but if it just goes straight up, my plan is to smile. And so all I've been doing lately is smiling. SLV did pull back a little bit recently, but it hasn't pulled back enough for me to justify putting on any more positions. So that's what's going on with it.
There we go. People are winding us up with all these questions, and we got nothing for them. We're dropping the ball left, right, and center. He wanted you to have some crazy adjustments, some crazy 1x2s. Let's flip the quick question then. Let's see how are your Apple 75 puts doing, Uncle Mike? Short, I should say.
Oh, the short puts. They're doing all right. One of these days I might get assigned. We'll see. They're worth what, like maybe a fraction of a penny now? Yeah,
you got that nice sweet nickel bid, sir. You're like our friend here today, blasting out the puts for a nickel. All right, let's see. We're burning through these because our answers are so quick. Let's see. How about Sean here? Sean wants to know, you've discussed closing positions prior to earnings events on past shows. Why would I take an out-of-the-money option off the table before the announcement? Isn't that exactly when I want to have the option on? Yeah, you could certainly say that. Well, I think what he's referring to is what we said many times on the show in the past. I think the Rock Lobster has been a big proponent of this in the past as well, is taking that whole period we talked about, that run-up into, it could be whatever event risk, in this case earnings, but it applies to most event risk scenarios, where you have that vol creeping into the product, helping to offset, if not completely mitigate, the decay that's going on in that option. So for, about a week and a half to a week before the event, you get a nice period where if you're long premium, you're not paying a ton of decay, if anything, really, because all that vol coming in is offsetting a lot of that decay going out. So as a result, you get a nice little low cost, if not free, swing at the bat. So that's kind of what we've been referring to in the past. So I think that's why, and then we always said, take that off before the event itself. That's not saying you have to go out and take everything off ahead of an earnings announcement. If you are one of those people who likes that tumultuous period where, going over the falls there where the announcement happens and the vol is going crazy and the underlying's all over the place and people are making sense of what the company is trying to say. If you're okay with that and you're putting on those options to spec on that, like our friend today, doing that with, NRG, I believe? Dick's Sporting Goods. He was clearly putting stuff back on because he wanted to stay in for that moment of the earnings tomorrow. And that's what you want. If you know what you're going in for, that's fine. I think in the past, what we were talking about with that strategy, taking them off ahead of time, was that kind of free swing at the bat type strategy. And if that's what you're doing, then it makes sense to take it off because you don't want to have all that other risk. You got your little swing at the bat. If it worked out, great. If it didn't, no skin off your nose, didn't really cost you anything. Unless you ride it over the falls, then that volatility balloon pops and you're left holding the bag. Mr. Meatball, this obviously is up your alley. I know your cohort there, your partner in crime, a big proponent of doing this type of strategy. What do you have to say here for our friend Sean, who wants to know, why would you take your options off ahead of an earnings event?
Because, all right, the reason why you take your options off because of earning event is because you're smart enough. When I'm trading an option, it's because when I buy something, and this is really for futures too, really anything. You buy a stock because you think it's going to go up. You buy a future because you think it's mispriced. You buy a call spread, or you buy options and because you think they're going to go up, or because in value. When you get to earnings are so binary that any edge, options are underpriced, options are overpriced, the future's overpriced, the future's underpriced, the stock. They go out the window because, good earnings can still cause the stock to go down, bad earnings can cause the stock to go up. It's such a ridiculous crapshoot that you basically throw out all of your edge by carrying things into earnings.
Uncle Mike, any thoughts on this? I know you're not a big fan of these tumultuous periods, so what do you have to say for our friend, Mr. Sean?
Okay, got it. I wanted to make sure it was the same question. So, yeah, well, I view earnings as a coin flip for the most part. If you believe you're going to have a large amount of movement, then an out-of-the-money option can be a wonderful thing with which you can make a ton of money on if you are correct. However, if the option doesn't move a lot, then you can get your face ripped in. And that's what we always talk about on the show. Did the stock beat the straddle? The straddle being the at-the-money call and the at-the-money put going into earnings did actually beat it based upon the earnings movement. So the advantage is that you stand a chance to make a lot of money, but the disadvantage is that if it does not move enough, then you can be right and still lose money, meaning that let's say you paid a nickel for an option at the 60 level when the stock's at 57. And it's the day before earnings and you leave it on. Well, if the stock goes up to 85, then you're laughing all the way to the bank. However, if the stock goes up to 59.50 and nothing happens and the option's still at a nickel the next day, let's say, in theory, it probably would go up a little bit, but let's just be in theory and keep the option at a nickel, then you're right on movement, but wrong on the trade itself. So there's two sides to every story, and that's just what you need to think about when trading an option going into earnings.
And we need to think about our final segment because it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Like the man said, this is the portion of the show we tell you what we're keeping an eye on for the rest of the week into ye old weekend. Got a number coming out later this week. I believe it's called the Nun Farm. This is where the nuns tell us all about their farming activity. Those very active nun farmers are a lesser heralded portion of the economy, but very, very important. A bellwether for what the rest of the economy has to offer. So if you're interested in that and all things agriculture, tune in on Friday. for the non-farms. Other than that, not a heck of a lot really lighting it up from an earnings perspective this week. We had some of the retailers coming in and popping off last week. We got Dick's coming out tomorrow. That's your bag. So sporting retail still on the docket, but not a heck of a lot else really out there from an earnings perspective. That said, perhaps Mr. Meatball, we'll start with you. Aside from the nuns on Friday, what else is catching your eye? What else are you watching for the rest of this week?
For the week, I'm going to be watching non-farm payrolls at the end of the week, and I'm going to be watching interest rates.
Yes, we do have that looming specter of the Fed. I believe that's next week for the actual meeting itself, but you never know. They might pop off. One of their governors might say something out of turn, and we get all sorts of rocking and rolling. So whenever we get close to those meetings, things get a little bit wonky, to use a technical term. That said, Uncle Mike, what are you watching for the rest of this week into the weekend, sir?
So the nun farms, as you put it. I've never heard it said that quite that way. But just with that, and then are we going to recover? Can we still make new highs this week? We've come back. We have filled the gap, the Trump gap, as I'll start to call it, for most of the Trump gap anyway, from the big jump we had last week. And want to see if the bulls can come back to town and take out some more new all-time highs. And possibly I can say my trademark saying again next week, although I'm kind of getting more picky of when I want to say it.
So your trademark saying being, of course, never been a better time to buy calls than ever in the history of the market, correct?
Something like that.
Something like that. And unfortunately, we'll have to leave it there because that music means it's time to bring to a close this epic journey through the world of options. Hope you enjoyed journeying with us this jungle cruise through the world of options. Kick things off talking about all things volume and all things VIX and all things, a little bit of snap and, of course, commissions. What the heck do they really mean for your trading? Then we got in some usual activity, HYG, NRG, and Dick's. Good old Dick's Sporting Goods. Head on down to your local corner and you'll find one there. You too can shop at Dick's. And we got crazy into snap on all of your questions. You guys love snaps. What's that straddle going to do next this week or for the week that comes? Let us know at Options. Hit us up with your thoughts. You guys have all sorts of crazy ones, as well as why the heck should you trade options during earnings and all sorts of other fun stuff that you guys had on your brains this week. And we ended it with the aforementioned nun farms, a very unheralded indicator in the world of finance. But before we go, let me turn back to my cohorts, assuming they're still alive here. The Skype gods haven't wiped them out. Let's check with them really quickly. Let's start with the Greasy Meatball. What's cooking in the land of all things option, pit, and or Carmen line, sir?
We've got our next Saturday class this Saturday. It's on intense butterflies. It's the butterfly intensive.
Intense butterfly. So if you're like a casual, if you're a casual butterfly guy, forget it. Check your name at the door.
This is a 4-hour intensive on trading butterflies specifically.
Could I dare to say it's perhaps the master class?
It's not the master class.
Oh.
The master class is a multi-week program. This is we're gonna really look at butterflies for 4 hours and call it a day.
I like calling it the master class. It sounds good. So if you too want to be part of not the master class, but you're very intense. You're very intent on your butterflies, including I've been promised iron flies, because if you're intent on flies, you know you want to like your iron flies. Head on over there, optionpit.com, and check that one out. And Uncle Mike, are you back open for business, sir, or are people going to be crying again this week? What's up?
Well, it's hard to follow the act of the intensive butterfly, being the more of a casual butterfly trader myself. But that's a class that I think if you trade the butterfly, you are foolish not to want to go to a class that's just for that name alone. That's worth three quarters of the price of admission, I would say, and the other quarter is just going to be filled by a few jokes that the meatball says. But with that being said, we are open for business. It is Monty Hall time. It is let's make a deal time. Let's buy some puts. Let's sell some calls. Let's buy some calls. Let's sell some puts. Give me a call, folks. I want your business again. We are open, and we are excited to be back. Call me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
There you go, listeners. Hit the man up. He's fired up. M2saw@rcmfs.com. Don't find him on Twitter because he's not there. That's someone else masquerading as him. I'm kidding. That's him, but he does nothing with it. So don't hit up M2saw over there or Mike Tusaw over there on Twitter. But hit him up. He'll buy your calls. He'll buy your puts. He'll even roll them for you. M2saw@rcmfs. Just don't ask him to go to Mark's intensive butterfly seminar because they'll slam the door in his face. He's too casual. He's not intense enough for that, so that's not his bag. But hit him up if you want him to maybe land some butterflies for you, and you could do them together. All right, on behalf of Uncle Mike and the Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. A little bit of a change to the live schedule for the rest of this week. I'm going to be traveling to some big conference time here in the industry, unfortunately. So I'm not sure if we're going to be able to have all the live shows later this week. We'll let you know later this week once we determine for certain. But we will have shows. They'll probably just be on the old podcast version. So check those out where you normally find your favorite podcasts, including the website, iTunes, Stitcher, all those fun places. And I'll, of course, see you guys right here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.